This is the second in a series of videos describing how to work with the Excel financial projection template provided by Prosper Women Entrepreneurs Accelerator. The Excel file can be obtained from Prosper at www.prosperstl.com. This video addresses using the model for sales forecasting. A sales forecast is the starting point for any financial projection. When putting together a sales projection, don't strive for spurious accuracy. A sales projection is one of the few efforts where close really matters, like playing horseshoes or nuclear bombs. It will always be wrong, but it is worth doing anyway because it helps identify actions required to grow your business. It guides you in allocating people and money to grow. It gives you a starting place from which to refine future estimates. And finally, and perhaps most important, investors want to see projections. They want to see them for themselves, and the boards that represent them want to see them. All investors seek businesses that offer the prospect of viral sales growth. High growth rates, 10% per month, for example, are required to get to high investment returns. A common objective is getting 40 or 50 million in 5 years. Don't be lulled into thinking investors will be satisfied if you just pick a mathematically correct growth rate as a target. They also want evidence that you can achieve a high level of sales growth. That evidence will come from your metrics on interactions with customers starting right now. This Excel template addresses the need for support behind a sales forecast by using a sales funnel as its basic sales forecasting tool. You're probably familiar with sales funnels, which can vary widely. All funnels start with a measure of prospecting on top, go through some intermediate steps, and end up with converted customers on the bottom. Many funnels are possible within a single business. For example, a different funnel by customer type or sales channel, or both. Sales funnels provide metrics at every stage of the funnel and therefore allow you to measure and improve your sales performance. They also make it possible to explain why your sales forecasts are not pure whimsy. As you can see here in the blue box, each step of the sales funnel can be analyzed to understand what can be done to improve it. The Excel template that Prosper makes available is customizable to your own business with some limited Excel skills. It makes some assumptions, all of which can be modified about what kinds of sales funnels are most useful to your business. In the basic model, 3 sales funnels are built in, all of which are channel related. The first funnel is for direct sales because most startups start with direct sales of 5 to 10 beta customers by the founder and the founding team. These direct sales efforts are usually continued after the initial phase of the business in some form, for example, for large accounts. A second funnel is built in that focuses on web marketing because that channel is increasingly important to startup businesses. A third funnel focuses on channel partners. And in the business we're describing here, the channel partner begins late in the first year, grows internally, and is supplemented by additional channel partners in later periods. We will see in a moment how the model is set up to forecast with these funnels, and we'll leave it to the user to customize this model to their own business. Okay, let's pull up the Excel funnel and show how sales funnels feed a sales forecast. We'll talk about each section of the model as we use it. Most of the input for this entire model is confined to the first page labeled Assumptions. And the inputs you fill in are identified as red cells with red type. Start by filling out your company's name. In this case, the sample company is called Corey SAS, the first month of the projection, and your fiscal year end. For now, let's focus on the revenue section only, which is highlighted on the left in orange. Within the orange revenue area, you can see that the assumptions for all 3 funnels are identified by funnel: direct sales, web sales, and channel sales. Once you've filled out these inputs, the model will generate monthly forecasts for you on the next tab of the model labeled Monthly Projection. That's all there is to generating sales projection, although the more evidence-based your assumptions are, the more accurate and believable they will be. And this is what we're talking about when we talk about needing evidence, preferably from your own experience about what your funnel rates are. There are 5 inputs for the direct sales funnel, as you can see. At the top of the funnel is a simple number of solicitations every month. You can input these directly. For example, we'll start with 10 customers in the first month. Depending on your preferences, you can continue to enter numbers or use Excel to construct a formula that fills in the rest of the row for future months. This is a 5-year or 60-month model, so copying and pasting or using a formula can save a lot of time. In this example, we use a formula to increase the number of solicitations by 10% every 6 months. Next, look at your company's current experience converting leads from direct sales to trials, assuming you offer trials, and enter the yield or percentage of trials resulting from solicitations. In your business, do you offer trials, or is the intermediate step something more like a pitch to a potential client? Will the yield increase or decrease over time? For Corey SaaS, we estimate 40% and continue the rate at 40% for the entire forecast period. Next, enter the projected rate of subscriptions that result from trials or in your business pitches or whatever intermediate metric you use based on the best evidence that you've collected from customer experiences. The final two inputs are the number of months from trial to subscription or sales cycle and the annual revenue from a subscription in dollars. If you anticipate an additional lag, such as, for example, from solicitation to trial, you should amend this basic model by creating the input and copying the appropriate logic. Note that formulas for sales cycle already exist between trial and subscription. It should be an interesting, relatively simple exercise to see how to copy and modify it for additional steps. The second funnel is a simplified web marketing funnel. There are 6 inputs in this version, though you may decide your funnel should have more or fewer steps in its sequence. Once you understand the direct sales funnel construction, the web sales funnel is not difficult to grasp. Enter the number of web impressions per month in whatever form your web marketing takes, such as social media blogging, ads, or paid search terms. Enter the click-through rate to your landing page, the trial rate from your landing page, the subscription rate from trial, and the sales cycle, and the annual revenue per subscription. Channel sales are similar, and in this case we assume the company has a channel partner, that the channel referrals will begin later in the year, and they will grow at a given rate over time. In this case, we've used Excel's capabilities to show the channel referrals growing from this partner by 10% per month. Similarly, a second channel partner begins referring customer in the next year, and a third channel partner after that. The subscription rate from the channel is estimated, the cycle time, and the revenue per subscription. A final input statistic is the churn rate, which in this model's default applies to all subscription customers regardless of channel. That can also be modified if you want. The churn rate describes the percent of your installed base of customers that drop the subscription every month. Note that 2% subscription, or the 2% assumption, results in about a quarter of the subscription base dropping the service every year. Once you've filled out the assumptions, note that the revenue forecast for each funnel can be seen in table form on the next tab, labeled monthly projections. The combined revenue line is shown at the bottom, and it is carried forward to the income statement, which is the subject of the next video. Also included in this version of the template, because it anticipates a SaaS business, is the total number of trials in progress. And that can be useful in estimating the costs of trial, which is a sales and marketing expense in this model. Finally, in the third tab, labeled Graphs, you will find 3 sales funnels depicting each of the sales funnels that we've described here. They are found here at the bottom of the graph section. There's a little input you can do here to enter the beginning and the ending month of any given funnel. Beyond that, all the data should be available automatically. Congratulations, you've constructed a sales forecast, one that's based on key sales metrics which management can monitor during your projection period and use to explain the business to investors. Again, the more evidence you have that these numbers are sustainable, the more confidence your investors will have in your sales forecast.